I'm excited to have you back and talk more about the Toronto market. So, where should we start?
Things have escalated very quickly since you and I last chatted. It's like someone poured gasoline on the market here. Excited to go through the numbers. Big numbers that we want to look at. Obviously, the detached housing market is on fire, double-digit year-over-year returns. Same with semi-detached. This is where I think things get interesting because last time we chatted, condo townhouses had the biggest year-over-year growth. But if we look this month, it's like, oh, have things really slowed down in the condo townhouse market? And then condos, people are looking like, oh my God, an 8% decline? What the heck's happening? I'm hearing there's all these bidding wars and everything that's going on.
What is up, YouTube? Matt McKeever here, and in today's video, we catch up with our local expert for the Toronto real estate market, Emma Pace. So in today's video, Emma's going to break down for us exactly all the craziness that's going on right now in the Toronto real estate market. Quick reminder, link to all of Emma's contact information in the video description down below, but let's jump into it.
All right, guys, we're back with Emma Pace from Toronto. Hey, Emma, how's it going?
I'm doing very well, Matt. Thanks for having me back. I appreciate it.
Yeah, I'm excited to have you back and talk more about the Toronto market. So, where should we start?
So I think we should start before I share my screen here, just by prefacing this whole conversation with things have escalated very quickly since you and I last chatted. So, hopefully there's going to be some people who have seen my last video, and I'm going to reference some of the numbers from the last video in this one here to kind of, give a better kind of showcase of what's happening month over month versus just year over year. But yeah, things have escalated on our end, and I'm excited to kind of share that with people today to get a better understanding of like what the heck is happening with COVID. I think we were kind of curious to see what the seasonality would look like, but it's like someone poured gasoline on the market here. So excited to go through the numbers.
All right, let's jump into the data then, because I definitely want to check this out.
Yeah, so let me just share my screen with you here quickly. Perfect. So, as I said in my last video, I work for a company called Zoocasa, which is a data-driven brokerage. So we release these infographics every month, and these are things that I definitely like to go over with my clients, but I definitely want to showcase to the public as well. So, big numbers that we want to look at. Obviously, the detached housing market is on fire, double-digit year-over-year returns. Same with semi-detached. This is where I think things get interesting because last time we chatted, condo townhouses had the biggest year-over-year growth. But if we look this month, it's like, oh, have things really slowed down in the condo townhouse market? I think that's why when I hop into the next slide here, it's going to make a lot more sense for people. And then condos, people are looking like, oh my God, an 8% decline? What the heck's happening? I'm hearing there's all these bidding wars and everything that's going on, but how are prices still relatively low? So I really want to give the viewers a better understanding. These are year-over-year numbers, okay? So these are numbers, based on what happened last January to this January, right?
So, just kind of a reminder for anyone at home. Last January, it wasn't the end of the world as we know it back then. It was actually just a normal year. It wasn't really until March of 2020 that, and we can obviously see that on even your chart here, right?
Yeah, 100%. That's a great point, Matt. So you'll notice, I mean, realistically, in and around February, March 2020 was really like the peak of the market, especially for condos, right? So we, if we're analyzing year-over-year numbers, are looking at just prior to the peak of the market last year, right? So yeah, I was in Mexico at this point in time last year, which I definitely don't have any plans to do right now. So things have changed relatively quickly. But what I wanted to do was go back and forth from last month's numbers to this month's numbers because I think those are more accurate.
Tells a different story.
Data, yeah, and that's exactly what I have up here, Matt, is data tells us a story, but specific data tells specific stories. So I'm super happy that you said that there. Good timing. So I highlighted two specific numbers. One is the detached number. So this graph that we're looking at now is what I shared with you last month. Okay, so this was year-over-year numbers from December 2019 and 2020. So this looks, when we look at this, you're like, oh shit, condo townhouses and semi-detached are crazy. Detached weren't that crazy and condos were down about 5%. But let's look at specific numbers here, okay? Detached pricing month over month, you'll see on the side of my screen here, is up 7% from December 2020 to January 2021. If we look, the December 2020 number was 1.475 was the average price point. Fast forward 1 month from when we talked last month, the average price point is 1.581. So within 30 days, if you own a freehold house in Toronto, you're up $100,000 in equity position right now, which is bananas.
Mm-hmm.
It's important for people to understand when these infographics come out, it's really important to look at this as 15% year over year, semi-detached 20%. If you're just keeping an eye on the market, these are great bird's eye view numbers to look at. But if you're active in the market, you don't need to be looking at year over year. You need to be looking at what's happening month over month, because that's the actual market changes that are happening. So the other point that I wanted to make is right now, I told you, Matt, since you and I spoke last time, the condo market has changed drastically. On my end, I'm starting to see multiple offers are coming back. I told you last time we chatted, we had a little bit of time to search with clients. That window of opportunity is closing and has closed for some people, okay? And I think that's a result of that number that we talked about last month, which was the gap between detached pricing and condo pricing. We talked about that last month, and the number last month was 2.35. In an average market, we usually see that multiple is around 2. So the gap between detached pricing and condo pricing is drastically widening because detached prices are going up $100,000 right? But I think what's important to understand is, this data is showing 8%, an 8% decline year over year because we were at the peak of the market last February. But if we look at the average price for condos this month in January, it was just shy of 625. And if we look at December's numbers, they were 625 as well. So prices aren't down, prices are flat. And I think, I don't know for sure, but based on what I'm seeing in the market, I suspect that next month we're going to see something similar to this, where it's still down from the peak of the market, but I think we're going to start to see that this actual price point is starting to drive upwards as a result of low inventory and people getting really frustrated with the freehold market, because 7% month over month growth is unsustainable and it's crazy out there.
Yeah, really hard to adapt, and that's why you need to really have your finger on the pulse with this data, because it changes so fast. And I'm sure both you and I can already see that March's data is probably going to look wild year over year, right? Because last March we had the huge drop when COVID hit.
Yeah.
Meanwhile, it seems like the market's really starting to heat up.
100%. Yeah. So I think that's critical. Like, especially for any viewers that are watching this video, you got to understand, where are you at in the cycle? Are you someone that owns a property, you have no intention of selling, you just want to know what the heck's going on out there? Yeah, look at the year over year numbers. If you're someone who wants to get in the condo market because you've been reading that there's great opportunities out there and all this kind of stuff, then you need to be looking at month over month data. Because to be completely honest, if you're not working with a specialist like myself, or you're not deep diving into data like Matt does, and you're just looking at this infographic, the info is there, but you might not be looking at the right stuff. And so if you are thinking that prices are down 8% and you're going to get some unreal deal and be able to take your time in today's market, this data does not show that. So you have to be very cognizant of what media sources you're reviewing, because they might not be presenting the data that you're looking for.
Yeah, it's so important, guys, that we understand that there's a huge difference between data and intelligence. And it's really what happens in between is the interpretation of the data into intelligence. So what else do you got for us, Emma?
Yeah, for sure. So just quickly, we touched on this last month. I just want to emphasize, yes, COVID slowed things down temporarily, but you'll notice in every segment of the market, the total number of transactions and trades that are happening are up multiple double digits for each category. And like I said last month, condo prices are down year over year, but we're up 86% in terms of total number of trades that are happening. So the market is very, very active. And I'll just repeat what I said last month. It takes two to tango. there's two people in every side of a trade in order for a transaction to occur. So deals are absolutely happening in the condo market for sure, more so than any other category of property right now.
Yeah, like there's a lot here, right? Like that's crazy, the increase in volume that's going on. And again, we haven't talked about the inventory levels yet, but I can guess what this is doing. And like, again, if we were seeing weakness in the condo market earlier, we're probably churning through a lot of that weakness now simply with the volume of transactions occurring. So one thing I would like to point out for people is, say in March of last year, when we see a price drop, understand there's a huge volume drop that correlates with that. Where right now, even if you see some weakness right now in the market, understand that the volume is increased so much that we're likely going to burn through any of that inventory relatively fast.
Yeah, so honestly, I think you might be a mind reader, because my next slides are completely about inventory. But yeah, I fully agree with you, Matt. As we continue to get into March, April, May, when things were extremely slow, because that was when everyone like legitimately thought you went outside and you were going to get told, right? So nothing was happening. Everyone was like, what the hell? So to see 100% increase over last March, like don't be surprised to see that data, because nothing happened last March, right?
Mm-hmm.
So yeah, these numbers might even look crazier as we progress into year-over-year numbers from the actual original lockdown. So yeah, let's talk about months of inventory, because months of inventory is, in my opinion, the most important metric to understand what the hell is going on out there, right? So quick plug, I told everyone for a long time I was going to do a YouTube channel. I finally made a full video on this. I'm not going to go too in depth, but I did make a full video on what months of inventory means. So let's go over this quickly, because I don't know if you agree with me, Matt, but when I look at this and I think about what this means on the inverse, I believe that this period of time is probably the bottom of the market. I don't know for certain, but I think that if we look at this slide, and shout out to Scott Ingram, he's the guy who posts many of these data points and graphs, and I follow him regularly. So if you guys want more information, definitely go check him out on Twitter. But essentially what months of inventory is, it's a measure of how fast all of the existing inventory on the market would last, assuming two things. One, no new listings come to market, and two, how quickly inventory is being eaten up right now, okay? So basically, if nothing else comes on the market from a new listings perspective, how long would it take for all the existing inventory to get eaten up off the market? Okay, that's what this particular metric shows. And so what we'll see here, if we go back, this is the last 6 months, this black line being freehold and this green line being condo, you'll notice August, we were at about 2.5% for condominiums. I'm gonna talk about condos because freehold's been like flat this entire time. But if we look, we start to see this number trend upwards. And when this trends upwards, what this means is that we're going into a more balanced market. So anything at 4 months or less of inventory would be considered a seller's market, meaning like there isn't a whole heck of a lot, because if no inventory hits the market, it's only going to take 2.5 months for us to have no more listings, okay? So when we start to see this trend upwards, it means that there's a softening in the market and that things are becoming more balanced. So between October and we'll say December, it was a very neutral market, very equal playing field for buyers and sellers, lots of negotiating room, all of that kind of stuff. Then we start to see this number trend downwards closer to 1 starting in December. I would expect to see that in any given year, just as a result of people not wanting to move or list their properties in the winter. But if we look, so it starts to drop, and then where it gets crazy is realistically when you and I started chatting last time, right?
Yeah.
And this is when the other lockdown restrictions hit. And I said, I thought inventory would tighten up because no one has anywhere to go. No one can renovate their house. No one wants to put their house on the market unless they absolutely have to right now. So what I think is crazy about this is, as of last week, the condo market has a lower months of inventory number than the freehold market. That's insane to me. That is crazy. We haven't seen that in so long. So that means that shit is happening in the condo market.
Yeah, guys. And even if we look at, even if you factor in the fact that maybe we're seeing an 80% increase in volume year over year, again, like let's back into these numbers. Let's assume that we were looking at double the volume of transactions. We would still be like, if we tried to normalize this 1.3, it's still going to come out to like a 2 or a 2.2, a 2.6 max, which is still actually going to put us right to where we were kind of pre-COVID.
Exactly.
So I really find it very interesting to see these developments, and definitely I think for those that are trying to predict the market, like these are the data points you need to be looking at to least understand whether we're coming or going.
100%. I couldn't agree with you more. Like these metrics are finger on the pulse metrics. These are what, like, this data shows us what's happening real time in the market. This data up here shows us what's happening over a longer period of time for us to have a bird's eye view. This shows us, okay, there's something here, something's happening in the market. And if we want to forecast what we think is going to happen, unless we see some drastic increase of listings that hit the market and all of the buyers go by the wayside, I think we're going to be in for a pretty tight market, especially coming up to the spring, which is when we see the bulk of the trades happening.
Mm-hmm. Absolutely.
So yeah, key points and key takeaways from the slides. There are lower months of inventory in condos than freeholds at this point in time, and the window of opportunity to take your time to make decisions is closing or has closed. So to that point, I want to talk about another graph that Scott has here, and that is weekly active listings. Okay, so these gray bars are total active listings on the market. The green trend line are 0 to 7 days on market. So these are fresh listings, and this orange trend line is 30 plus days on market. So these are stale listings that have like been sitting around for a while. Okay, guys that were probably listed in December, November, that kind of thing. So what we notice is there is an increase in new listings. To be honest, it's been relatively flat since you and I chatted, because I think you and I chatted in and around this second week of January originally. So it's been relatively flat in terms of new listing offerings that have come to market. But what is really important to understand is these things are obviously getting chewed up pretty quickly, because the total number of active listings is going down and this is staying flat. And then the biggest metric to me in this whole graph is people are going and revisiting old stock as a result of this stuff selling really quickly, because they're saying like, what can I go back and try and get a deal on, or how do I not compete in multiple offers? And so we're starting to see like this is declined by half. Chatted last time. You know what I mean? So people, number of listings are flat since we chatted, but the new stock is selling quickly, and old stock is being revisited as a result of low inventory, because people are just trying to figure out what options they have before the market goes crazy again.
Yeah, this is a really useful chart. I definitely love that.
Yeah, I think it gives us a lot of data points about activity and how people are reacting to certain things. And I'm starting to see, even in the rental market, things picking up a little bit. It's not taking as long to rent places out. It was taking 30 to 60 days previously. Now I'm starting to see things rent a little bit quicker, right? So there's definitely more activity happening in the market. My conversations with sellers in November were, hey, you guys got to be prepared for a 30 to 45 day kind of turnaround time on your listing. And now my most recent listing that I had in January, which we'll say is attainable for most people, like in and around that 700K range, sold within 7 days, right? And we didn't have any of this data at that point in time. So the market's moving. I did promise you last time that I would ask the team to pull the seasonality chart from COVID. So we added to this. I wanted just to kind of highlight, look, you'll notice typically in December and January, a little bit of a lull. And we just kind of talked about that. So year over year, okay? January, all these down points for traditional markets. The lowest point for 2020 was obviously during April, during that shutdown, which was, essentially nothing was happening, right? But I think what's crazy is this is when the lockdown ended. So this is why I'm kind of curious to see what's going to happen as a result of the second lockdown. Literally, the market just skyrocketed right after. And what we didn't end up seeing was this typical lull that we see in the summer, right? We see this big lull. It stayed flat because nobody has anything else to kind of focus on. No one has vacations planned, and that's usually what I see is my sellers are like, I'm going on vacation for the summer. Let's not worry about this. We'll revisit this in the spring, and that's why we usually see a bit of a peak in the spring. But we noticed that this stayed relatively flat, and that the winter lows were not nearly as close to the winter lows that we typically see. So much more activity in the market on this trend line than what we typically saw in, prior to COVID.
Yeah, that's a lot of volume.
So much volume. I'm honestly curious to see what's going to happen as a result of the second lockdown, but or the lockdown ending. I think we're going to see more inventory. Like for the people out there that are wondering where are the new listings, like the new listings are coming 100%. They're going to be out there. But, coming from someone who works for a website that generates a lot of leads and we get a lot of data as to what's happening online, the most leads that we get come through as a result of new listings coming onto the market, because now people have more stuff to look at online. So we start to get property viewing requests and stuff like that. So yes, the listings are coming, but so is the competition as a result of those new listings. Yeah,
it'll be really interesting to see whether supply or demand outstrips, but I got a feeling it could be demand outstripping supply still further.
Yeah, I mean, look, I think obviously the freehold market's insane. Right? We saw that. I mean, we wouldn't be seeing less than 2 months worth of inventory for 6 months across the board. Like we see a number 2 in there for 6 months. So obviously there's very high demand when it comes to that particular segment of the market because people want more space. They don't want shared spaces right now. They don't want to touch like buttons in the elevator that other people touch, right? But the flip side to that is now it's become extremely expensive, $100,000 more this month than last month for those benefits, for that comfortable lifestyle that everybody wants right now. And as a result of that, people are getting frustrated, like rightfully so. It's a very frustrating market. And so what I'm seeing is like kind of threefold. People in the freehold market who are just absolutely pissed off. Like I keep getting my ass handed to me in wars, and so I'm going to the condo market because it's less competitive. I'm just gonna forget this. I'll go to condo townhouses or condo freeholds. I can't afford the freehold market anymore. And then I got all of my buyers who didn't buy in 2020 that now have FOMO that they missed the market. So they're more competitive. And then I got all these new buyers who have been at home saving money because they were like, I'm getting out of my lease because of this. And they've been at home with high paying jobs for almost a year now with zero expenses, saving money. And now all of these new people have down payments. So those are the 3 segments that I see in the actual market, in the condo marketplace. Is frustrated freehold buyers, FOMO buyers from 2020 who are like, I just need to get something right now. And then a whole batch of new buyers who have been able to actually save money as a result of this pandemic because they've moved home with their parents and they have good paying jobs.
Love it. I'm pretty sure we could turn that into the 3 Fs if you made the last one frugal.
Yes, for sure. 100%. That's awesome, man. But yeah, I think the one other thing I wanted to show from Scott was sold over asking. Because like I said, I'm starting to see bidding wars come back. I'd probably say it's about 50-50 right now for listings that are coming to market expecting over asking or not. But the most important thing to understand is when we chatted last, Matt, 12% or so, 12-13% of listings were going over asking, and that number has doubled since we chatted last. So me and you as metric people and people who look for returns, if we could get 100% return, we'd be pretty happy. So this might not look crazy. You're like, oh, 26%, but you need to look at it in context. That's 100% more than when Matt and I chatted 4 weeks ago.
Yeah, and just to reiterate, just to make sure people are clear on this, this is the number of listings that sold over asking, not the percentage they sold over asking. But yeah, it's really interesting to see just the increase because, again, I know sometimes people get caught up in like, why does it matter whether a property sells for list, below list, or above list, but I really do think it shows the mentality and just the general psychology of buyers and what's going on there. Because again, understand when we have narratives that like condo prices are dropping, right or wrong, people like even if someone prices their property correctly based upon the market fundamentals in that moment, a lot of buyers will have a perception of I'm supposed to get a discount because the market's dropping. And so again, that really does dictate a lot of human psychology and how people react. So if we see people start to think like, oh no, it's normal again for multiple offers, oh no, it's normal again to sell over asking, like it won't take long, I think, for a lot of Toronto buyers to go back to that script because it's a script they're very familiar with.
Yes, and I think that's a key point. So I mean, here's a slide that I had just to kind of show you. I competed on this property this week, 14 offers on a condo, right? So what we're saying right now is not BS, like screenshotting stuff to show you guys. But what I wanted to your point, Matt, I wanted to kind of go over some strategies with people to help them stay competitive in today's market. But I want to talk about this last point very quickly with you because I think it goes hand in hand with what you were just saying. And this is something that I've been doing with my clients who, we just talked about the people from 2020 who have FOMO right now, right? You need to, if you're an agent and you're watching this video, or you're a buyer who's been searching in the market and you entered the condo market in October, November, or early December, you need to adjust your expectations now. Because if you do not adjust your expectations right now and the market continues on the trajectory that we expect, I can almost assure you, and I've had many clients do this in the past, when spring market comes around and this bidding war situation becomes more of the norm, like Matt was saying, you are going to have a really tough time mentally saying, I can't convince myself to pay this price now when I could have got this in November or December. And you're 100% right to think that in your head, but your agent is doing you a disservice if they're not staying ahead of the curve to readjust your expectations based on what's going on in the market. For me to just tell my 2020 buyers, hey guys, everything's fine, it's all the same, don't worry, we're gonna find you guys something, is a disservice to my clients because they're actually probably not going to buy something. It's going to be way harder for me to readjust their expectations in 6 weeks from now when things have gone crazy versus having that touch point with them now to say, look, I don't control the market. This is what's happening. What I need to do is to present you the data and to stay ahead of the curve with you to make sure that I can actually find you something because I do care about you and I want to make sure that you get the best deal. If we're looking for something in 6 to 8 weeks, it might not be the best deal and you might not be able to convince yourself that it makes sense based on what you saw 6 months ago.
Yeah, and it's really important. If we want to win today, we need to just focus on the facts today, right? It's so easy to get caught up. And again, we see it whether you're an active real estate investor in this moment or if you've been an investor over the last 10 years. You probably like had that FOMO, right? That, oh shit, I should have bought back then, but I'll wait and try and time the market. I think it's really important to understand if we're investing based upon fundamentals, if we really know what our goal is as an investor, all the other stuff is kind of noise and we can really just focus in on what we can control. Because I know for the last 10 years, there's been people telling me as I was an investor that like, oh man, the market's going to crash, you're going to lose everything. And while they've been waiting to try and time the market, I've been able to build an empire. And again, it's based upon just focusing on the facts, not having emotions or anything creep into your decision making. Just be a rational actor in this space.
100%. And to that point, this is a data, like the way that I see it, it's a data-driven industry, and you deal primarily with investors, Matt. So I think it's easy to get that point across because people want great deals. With me, I'm dealing with some investors, and I'm also dealing with end users, and that's where emotions come into play. And it's important that you work with someone. It doesn't have to be me, but work with someone who knows how to adjust your expectations based on data and also helps you get your emotions in check because you should be excited, and this is an emotional process. Like, I don't want to ever take that away from someone because, dude, like not everyone's an investor, and some people some people are so stoked for their family to move into this house, and rightfully so. You should get excited. You should have that emotion. This is a friggin' fun process when you're an end user. But with that being said, you can't get too caught up in the emotions because it can be crippling and heartbreaking. You know what I mean?
Yeah, absolutely.
So, yeah, sorry, go ahead.
No, I was just going to say, is there any more data that you were going to cover for us today, or?
No more data. I think we went pretty heavy in the data, but I think just to go over like a couple very quick strategies before we wrap up here. If you want to stay competitive I know the London market's crazy too. Everything's just on fire right now. But if you want a couple strategies on how to stay competitive in today's market. One, you need to be doing day 0 showings, not day 1. So I don't know how Matrix works in London, Matt, but for us on Stratus, if I set a client up on a prospect match, they don't get the listings until midnight. Therefore, they're 1 day late in seeing the property. You need to be looking at the property. If it lists at 10, you got to get out there at like 4 or 5 that night and be making a decision on it. Otherwise, you might miss the mark on the property that you actually like. So day 0 showings, not day 1. Bully offers are an extremely effective tool in today's market. So if you can put in a preemptive offer, if they say offers are next week, try and put one in today. See if you can negotiate with the sellers so that you can reduce the amount of competition that you've got.
On bully offers, Emma, any best tips there? Because again, I sometimes see people doing bully offers and they think they're doing it right, but then I look and I'm like, I don't know if that's actually like, yes, you got the offer in, but we also need to really be aware of what a seller wants to see on that bully offer, right?
100%. So this goes to my next point too, which is know your audience, okay? And I had a conversation with Jeff Weibel earlier this week about that. I had an offer last week that I did with clients, and we knew that the sellers were, like, they did an amazing job at upgrading the house. I figured they probably raised their kids in this house. Like, they loved it. They've been there for 20 years. You know what I mean? I know that these people are gonna care about who lives in their property next. This is their family house. Like that. This is where the emotion comes in. These people do care. And then we have the investor side where it's like me or you for an investment property. I don't care, dude. If you want to rent this place out, go ahead. I care about the numbers, so present me the facts. So I do believe in putting some form of cover letter or whatever in the offer. But it's not a one-size-fits-all. Know your audience. And I think that goes to your question about bully offers is don't just put in a bully offer to put in a bully offer. You need to say, okay, is this offer strong? Because if you're just presenting an offer, that agent is going to be obligated to present it to their clients, and you're wasting the agent's time if it's not something that they're going to get done. And as a result of that, you're burning your relationship and the likelihood of you getting it on offer night. So if you're going to go in with a bully offer, it needs to be a very realistic number that the sellers are expecting to get on offer night. That's the whole point of this. You're giving them what they're looking for to reduce the competition later. You will typically save a little bit of money if you can get it on a bully offer, even though you feel like you're paying an astronomical number. But that's only because you're reducing competition and you might only be competing with 1 or 2 people as opposed to 30. Okay. So I think that's you need to understand what you would be putting in on offer night and what the likelihood is of that, and coming in with an aggressive bully offer. Don't just put in an offer to try it, because at the end of the day, you might be hurting yourself on offer night if it's not realistic.
Yeah, absolutely. And again, obviously, guys, once we're dealing with multiple offers, they need to be clean offers, right? We need to be presenting the best piece of paper we can. So having 10, 20, 30 conditions just isn't practical. And especially if we're trying to be a bully here, like, you need to be very clean. Yeah,
your offer, like I said, your offer needs to be exactly what they're looking for on offer night. You're just giving it to them early. And if you think in today's market that a seller is going to take the risk of taking a condition on day 1 when they're expecting 10 offers next week, you're a bit out to lunch with that expectation. And again, like this, not to go too much over our time here, Matt, but I think that when we're doing offers, you need to understand that there's in theory 3 negotiations that are going on. Me as an agent, I'm negotiating with my client to make sure that they understand what is realistic in today's market. I'm also negotiating with the other agent and trying to get through to that agent because they're the gatekeeper to the seller. So keeping their ego in check and keeping our relationship at par is extremely important, because I want them to go to bat for us on offer night. If there's 30 other people, I want them to be like, dude, Emma knows exactly what the hell's going on. We feel very confident that her clients are going to be able to come through and close on this deal. Because at the end of the day, you got to put your seller hat on. What does the seller want? The seller wants to know, are they going to get their money on the day that you promised them to? And you need to make them feel comfortable about that. And then the third is the negotiation between the seller and the buyer. The gap is, the buyers want the lowest price and sellers want the highest price. And our job as agents is to bridge that gap and to make sure that our clients are happy. Okay. And in today's market, unfortunately, as buyers, we lose a lot of leverage when there's so much competition out there. So we got to figure out what can we do in addition to price that would be of benefit to the seller. So always think about that as well.
Absolutely love it. And I really appreciate you bringing all the data to this call as well, Emma. I'm sure you guys at home absolutely loved it. I do have one last question. So
okay.
I'd love to hear, like, what's a building, what's an area, what's a neighborhood? Because I always get insights from you, what's something that's really catching your eye. But before you tell us that, just a reminder, guys, there's going to be a link to everything Emma talked about in the video description down below. So if you want to get in contact with her as well, if you want to jump over and check out her YouTube channel, where she's actually breaking down a lot more detail some of the concepts we discussed today. Really want to encourage you guys to do that. It's in the video description down below. But yeah, Emma, before we let you go, give us a tip. What's an area, neighborhood, a building that you're really hot on?
I'm overly bullish on the waterfront right now, I think. Just because I honestly, I love Toronto, don't get me wrong, but I think they did a freaking terrible job with the waterfront over time. They just tossed the Gardner right up there and then neglected the beautiful part of Lake Ontario. So I'm pretty bullish on kind of the Sugar Wharf area. It is a little bit of a higher price per square foot because a lot of the stuff down there is geared to more towards luxury, but dude, there's nothing like waterfront property, you know what I mean? Especially in one of the biggest cities in this entire country. I think if you can lock in a gorgeous waterfront property downtown Toronto, I don't see there being many issues with that long term.
Awesome. Really appreciate the insights. And a reminder, guys, this is going to be a monthly feature here on the YouTube channel. So if you haven't subscribed, do so. Hit the notification bell. We'll have Emma back in a month, and she'll be breaking down for us what occurred, again, over the last 4 weeks in the Toronto market. Hope you guys are enjoying these very timely updates. Smash the like button, and we'll see you in the next one. Appreciate it, Emma.
Thanks, Matt.
All right, guys, that was an amazing discussion with Emma about all the statistics and data behind what's going on in the Toronto real estate market. I'd love to hear your thoughts, your opinions, as well as your experiences in that comment section. Let us know what you're seeing going on in the Toronto real estate market, whether you're watching from the sidelines or you're actively participating as a buyer or seller. Let us know.